What's going on, everybody? Welcome to module number 8 in this day trading course. In this module, I'll be showing you how I go about planning the charts every single day, make my pre-market plan, show you my checklist, and prepare the charts together. So before we head to the charts, let's go to the slides and cover a few key points. So planning is pretty much everything in trading. Before the market opens, you need to have a clear plan, what the market conditions are, what levels you want to trade off, if there are any news events, etc. Now, trading is a serious business, and if it's not treated like one, it will literally be impossible to become profitable. It is the least you can do to make a good trading plan before the market opens. Now, me personally, I usually open the charts about an hour before the market open and analyze it in a calm state of mind. About an hour before the market is surely enough to analyze the market conditions, look at the higher time frame, mark out your supply and demand, support and resistance levels, look what targets you want to look at, all that stuff. Okay. Now the first step for me is I look at the daily and weekly candles and I see what patterns appear and if it's at a certain location where it might reverse. And also I really like to mark out the previous week, day, high and lows to see if it has been taken out to gain also an idea where the market might be going. Now the next step would be starting off drawing your supply and demand levels. This will go from the H4 all down to the M15. We will refine it as much as possible till we have the right levels. Same thing will go for the support and resistance levels. We will use the H1 or the M30, M15 to draw very obvious and clean support and resistance levels. Next step is what I do is I analyze the pre-market. Now, is it uptrending? Is it downtrending? Is it balanced? The next step would be to mark out certain highs and lows, if there are any, that need to be swept before you choose to buy or sell. So as I've shown in previous modules, especially for the entries. Now, let's say you have a resistance level and we have the pre-market that came to the resistance reacted of it. Well, maybe it would be a good idea to mark out that high that came in our level and wait for that high to be swept before actually trying to sell again from that resistance. The next step would be to mark out potential targets for each of the levels that you want to be trading off. So let's say you have two main levels for the session. You have one demand and one supply. Well, if the market comes to your demand level, where your target is going to be. Okay, so there still might be, the price might be far off from your level, but it's still good to have an idea and maybe mark out some levels where you would be willing to take profits, where you think the market could actually reverse. Now, the next step would be to write down your whole plan in text, including your bias, the market conditions, and then also you need to make a buy and a sell scenario. So for a buy scenario, I want to be buying from this demand or this support, and for each sell scenario, I want to be selling from this level or this level, and also mark out your targets. So after we done the charts, I will show you exactly how I do that in my journal. And the last step would be to take a screenshot of the charts, usually the H1 time frame, the M30 time frame, and basically place it together with your written plan, so you can always come back and see what your plan was, and in the end, obviously, what your what trades you took or what trades you didn't take, and what actually happened in the market. So let's head to the charts and prepare our charts for today. So today is Monday, so it's a new trading day. It's still pretty early for me. Obviously, my time zone, as I'm in Europe, I start trading at 3:30 p.m. So I still have quite some hours. This is just for the purpose of this video. Obviously, I will look at the charts later on before the market opens, but that's not to say that we can already mark out our main key levels for today. So I even start on the monthly and I just look at the direction. Obviously, everything is super bullish. It's at all-time highs. And I do like to mark out the previous month high. And I'll mark this previous month high and also the previous month low. So these would be two key levels just to see what price has done. And as you can see, we didn't take out the previous month low. Already it's the end of the month. So very soon, in a couple of days, I will have this candle's high and low marked on my charts. We did take out the previous month high, but we didn't reject it. We just completely smashed through it. Same thing will go for the weekly. I will mark out the previous week high, and the previous week low as well. As you can see, the previous week was a bearish inside bar. it swept the previous week high. So obviously with this candlestick pattern, as you've probably seen in the module about daily and weekly candles, we can expect still some bearish moves. Now obviously it's going higher, so we might have some supply levels up here in this wick. So we can definitely expect some bearish moves this week, and they might be quite aggressive. That's not to say that it will happen. There's a chance as well, obviously, that the market will just completely smash through all the supply zones and be very bullish. But we have to keep this in mind that there's a potential for aggressive downwards moves. Now let's look at the daily and do the same thing. So we have previous day from Friday, previous day high, and previous day low. Okay, so as you can see today, already in the pre-market, very early, we completely broke through the previous day high. We didn't reject it. We're going very aggressively to the upside, and this is quite normal to see after an inside candle like this. As you can see, this candle is an inside candle. It's not an engulf. It didn't take out the high or the low from Thursday, so it's an inside candle. So it's very low probability that the next candle will also stay inside and will be an inside day. It will either take out the high or the low, sometimes both, but usually just on the one side. And as you can see here, it took out this previous candle's high and it didn't reject it. It just completely smashed through it and is very, very bullish. Now you can see the direction of this candlestick pattern. Basically, this is just an inside candle, which is obviously not really a pattern of continuation. But if you look at the location, we can see, let's mark this as demand. We can see that price came into this daily demand. Okay, there's actually two small demands right next to each other. This one is one big zone, and you can see that price came in and is starting to react of it. Okay, which is a pretty good bullish sign. So we could expect once price came back in here to see some rejection, and we did see some rejection from this area. This is why this left this whole wick. It would have been nice to see this candle to be at least an engulf. It really tried, but it wasn't an engulf. And at a certain point it was, as you can see, this top wick was up until here. So at a certain point it was an engulf, but it didn't manage to become an engulf. Obviously, nothing is always 100% in the market. You can just look at patterns and see what is the highest probability of what's happening next. But in this case, well, we're so far very, very bullish, okay, on the daily. But again, we have to keep in mind that the previous week was a bearish inside bar, so we could still have a nice reaction of a supply up here. Now that we understand the market bias pretty much, where it's reacting from, how the previous week was, there's one more level that I like to add to the charts, which is the previous week POC. So we have this Friday all till Monday, so we can mark this right here, and we have the previous week POC right here, which is the area where the most volume has been transacted in the previous week. So this would be this area, previous week POC. We can remove this. Okay, so we can see that we also smashed through the previous week POC. Now let's head to the H4 time frame and start looking for our supply and demand levels. So as you can see, we have a supply right here where the market is currently in. It is an engulf. There's a lot of follow through. There's a lot of breakup structure. So this could potentially be a good supply level to be looking at. And price obviously is in there right now. So all we need to do now is look on a lower time frame, such as the M1, and see if there's actually consolidation before the move down. And even on the M5, you can see how much consolidation there was. There was a drop and then a base and then another massive drop. Okay, so this would be a valid supply level to have drawn on your charts. And obviously price is already at the edge and looks like it wants to break out. You can still have to see if it just will sweep these highs out and react. But anyways, apart from that, it's a valid supply to have on your charts. Cool. So on the H4 time frame, I don't really see much else in terms of supplier demands, at least not in the near price section. Obviously, you can always go further back in history and draw out some more levels, but price is still very far away from that, so I'm not going to do that. I'm going to keep my charts clean. So let's drop down one time frame to the H3 and see what happens here. So on the H3, I can already spot one demand right here, where you can see it's a rally, base, and a rally. It is an engulf. There's follow through. there is break of structure. So this would be so far a valid demand. We need to look now on a lower time frame, see if there's consolidation. We can see quite some consolidation for the move up, as you can see right here. So yes, this would be a valid demand for me to be looking at on the H3 time frame. Now we have this level right here where you can see price was consolidating a lot, then made a base, did an engulf. There is some follow through. Obviously there's not follow through because of this candle, but over here there is. So we might have to look at this area as well, but we'll still have to look on the lower time frame and see if we can maybe find a cleaner level inside here, because it's consolidating for quite a bit. This is on the H3, so you can see how many candles this was here, consolidating in this kind of range before it actually went up. So on the H3, I don't really see much more to be drawing in terms of supply and demand. Let's go down one time frame on the H2. And on the H2, for example, you can see at the top, we have a rally, massive base, a lot of consolidation of about 7 or 8 candles, or 9 candles of consolidation on the H2, which is a long time, and then a massive aggressive drop with a lot of follow through. Okay, so this area right here would be a valid supply for me. And since there was so much consolidation even on a higher time frame, what I like to do as well is use the volume tool and mark out this whole range and see where the most volume is. So maybe I can draw my zone more accurately. And as you can see, where the volume started dropping heavily was from this level right here, from the 4850s. So I will draw my zone a little bit bigger to include the biggest volume area. So this would be a supply that I'll be looking at. If price would break this supply, then this would be my next area of interest to be selling, which obviously also aligns with all-time highs, right? And previous week high. Now on the H3, so far I don't really see much, H2, I don't really see much else to be drawing. Let's take a look now on the lower time frame, such as the H1, see what happens there. So on the H1, we had a demand right here. This would be a demand. You can see there's an engulf, there's follow through, break of structure. Price also has come back down again on the Friday session and reacted of it. So this for me would be a valid level to be looking to buy. Now if we zoom out a little bit, we can actually see a support level as well. You can see this price level right here, how there was multiple reactions of around the same area. So this, for example, for me would be a support level. Again, support, there's not really an accurate way of drawing it. It's just a general price range where price has reacted of. So I will leave this zone as it is, like this. And you can see how it wicked multiple times to the downside and aggressively went upwards from there. So this for me would be a valid support level. As you can see many times, massive reactions from this price range. Now on the H1, I don't really see any other levels so far to be looking out for or to draw. So I'm going to drop down one time frame to the M45, see if there's anything else. I don't really see anything else, to be honest. You can see here, which was our H3 demand. There has been quite some consolidation here. So sometimes what you can do as well is using in the volume tool for this range and see where the most volume is. And I think we drew our zone pretty accurately. As you can see, where the volume started dropping was right here and also right here. So we drew our zone quite accurately according to this whole consolidation range. So I'm going to leave the zone as it is. This one is good. This one is good. We have our support level as well, which is also clean. So to be honest, I don't really see any other valid supply or demand or even support resistance levels. And yes, you could be looking at resistance that turns to support, support that would turn into resistance, such as this level right here. There was a support turn into resistance, but me personally, I don't really like to use those flip zones too much. I like to keep it clean and just support or just resistance, right? I like to keep it very simple and not overcomplicate things. So obviously we have this massive rally right here in the pre-market with maybe a potential zone here, but I'm going to wait with that until we're closer to the market open and see what the pre-market did. Now on the M30, I don't really see again much else to be drawing on the chart. Everything looks pretty clean to me so far. We are going to drop down one more time frame now to the M15 and see what happens. And as you can see here, there's many times a small pullback and some reaction, but the reactions are not massively aggressive. There's not a lot of follow through, not a lot of volatility. Obviously, it's pre-market, that's why. So I'm not going to be drawing any levels in this area right here, even though there could be a valid one, for example, here, but this is very small and not a lot of follow through, so I don't like that. We'll have to see closer to market open and see what the pre-market did. Now this level, for example, here is an M15 supply where you can see a drop, a base, and another massive drop. It is an engulf. There's a break of structure, of course. So this could be a potential level to be looking out for. Now what I'd like to see now on the lower time frame obviously is consolidation. So we're going to take a look now on the lower time frame and see if we can find consolidation in that area. And if there is, then that would be a valid supply level. So as you can see right here, we have a drop, a base, and another drop. There is a little bit of consolidation, especially here at the top, but not for long. I'm not really going to say that I'm a big fan of this. So let's take a look with the volume to this whole range and see how it looks. So we can see there's not really a massive difference between volume where you can see the volume started dropping heavily or where it was increasing a lot. So what I'm going to do is I don't really feel too comfortable selling from this level, even though it might show a reaction. I'm not feeling comfortable to sell from this level, so I'm going to mark this level as a supply. But what I do is for supply or demand levels where I don't want to be selling or buying from, I mark them with lines so I remember that it is a supply level, but I don't want to sell from this level. Okay, so I would leave it like this, and I know that this is a supply that I don't want to be selling from, so I need to be careful if in the future there might be some buy opportunities. Let's say it pulls back and there's a demand over here and I want to target certain areas, that I would not hold my runners or hold my trades in this level, as it might reverse. Okay, but it's just not strong enough for me to be selling from this level. That's why I'm leaving this level right here, just to remember that it is a supply and the market might potentially reverse from this, but I'm not willing to risk my money and sell from this level as it's not strong enough in my opinion. As you can see, the market is breaking this supply level so far. So our next level of interest for supply will obviously be here at the top, okay, which is obviously a super clean supply level where I'll definitely be willing to risk my money to sell from. So now that we've analyzed the charts, we need to also establish the targets. Now obviously we are pretty far away from market open, so it's more ideal to do that closer to that, but I'm just going to show you some examples. So if the market would open and it's closer to our demand level, so price is coming down, then we need to look for targets, and we already know that our stop losses are usually 2 to 3 points, sometimes 4 points, depending on the market conditions. So we really need to be looking between the 10 and 20 point range for a target. That is more than enough. It's no need, and it's very difficult to be having 30, 40, 50 points rallies or drops and be in a trade with a 2, 3, or 4 point stop loss. Those are very high risk to reward trades, and it's very difficult to catch those. So it's better to be on the more realistic side, go for a 2R, 3R, 4R, 5R, which is more than enough if you have a decent enough win rate. So if price would come further down, like this, it would come to our level, then we can establish targets. Now obviously this price action right here doesn't exist, but if there was any price action right here and price will be close to our demand level, well, I would just very simply be marking, as you probably have seen in the targets module of the course, I would be targeting, well, M1 structure over here, I'm marking it lower over here, maybe there's a support and resistance level on the M1, for example, this one right here, you can see how resistance, support, report. So this would be another level. So I would have different targets on my chart for each scenario, for this buy scenario or even for the sell scenario. But like I said, obviously now it's difficult to show you guys that because it's not really close to our level of interest, and as it looks, it's breaking this level so far. So I would just mark M1 structure, a couple of targets, seeing what the point range is as well. If you enter somewhere here, then this is 9 points, this would be almost 10 points, this would be 16 points. So maybe this area right here could be your full TP, maybe one of these two green lines could be your partials. You can just mark out different levels and then see how the market conditions are. If it's volatile, if there's a lot of volume, price is moving very aggressively up and down, maybe you can have further targets. If the market is very slow, ranging, balanced, not a lot of volatility, not a lot of volume in the market, maybe you choose closer targets. Okay, so what I'm going to do now is I'm going to show you guys how to add this to your trading journal, and how actually to write a written plan, so you can always come back to that written plan even while you trade. Sometimes your mind does weird things and forgets about the plan or wants to ignore the plan, so you can always go back to your plan and see exactly what you need to be doing. So let's head to the journal now. Okay, so I use Notion for my trading journal. As you can see, you can just add a calendar and you can make it your trading journal, trading calendar, whatever you want to call it. And here, obviously, day by day, you can add your pre-market plan. And obviously, in the next module, I'll be showing you how to journal trades and how I add them to Notion, how I go about it, about analyzing trades and making screenshots, writing things, in terms of emotion or mistakes that I did or the things that I did right. So every day I would make a pre-market plan, just click on that. Then I have different labels, basically different tags that you can make. Obviously the pre-market is very uptrending, so I call it uptrending pre-market. Here you can see that I wrote down my whole plan. So a couple of things that I wrote down is previous week obviously turned out to be bearish inside bar, which indicated that we could have some bearish aggressive moves. This week, the previous day candle was an inside day with the high being taken out and price completely smashed through it to the upside. We are also reacting strongly of a daily demand, as you've seen on the chart, and the pre-market is very bullish, making higher highs and higher lows. So for our buy and sell scenarios, obviously, as we get closer to the market open, about an hour before, 45 minutes before, we'll have more information. So there might be new levels. This is just the levels that we have drawn out on the chart right now. As price obviously can still make new levels in the next coming around 4 hours until the market opens. So our main level for today will be the H3 demand at the 6698, which would be this level. And if price would break this level, our next demand would be 6665, which is obviously the top of the zone. You can obviously write down both sides of the zone, the top and the bottom. I usually always do the edge closest to the price action. So for supply it would be the bottom part, for demand would be the top part. And obviously it would be very uncommon to see price drop all the way, break this level, or break this level as well in the next 4 hours. This is very unlikely, so that's why I didn't even write down the support level. There's obviously still not a very high chance that price will drop all the way over here, but you never know what can happen in the market. So for sells, we are currently in this H4 supply, but it looks like price is breaking this level. There is an M15 supply above at 6735, which is the one I marked with the lines, but I do not want to sell from this level due to a lack of strength. Now it's important to also write down this stuff and say that you don't want to sell from this level, because sometimes price might go up and then you can see maybe an entry confirmation and your mind could switch and say, oh no, let me just risk this sell because in the end it is supply, blah blah blah. But you already validated that this is not a strong enough supply to be selling from. So it's better to actually write down, I do not want to sell from this. So if you do want to sell from it later and your mind is playing tricks on you, you can come back to your plan and say, all right, I do not want to sell from this level. Okay, so I have to trust my plan. Now our main supply is the H2, on the H2 supply at the 6749, which is the bottom of the zone, where we can expect an aggressive move if sellers are willing to step in. This is basically how I go about and making my pre-market plan every single day. Now I've showed you the checklist, what I look for. We've made the charts together. Now, like I said, there's still quite some hours, around 4 hours till the market opens. So in about 3 hours, 3 hours and a half, I will come back to the charts again and see if there's new information on the chart, maybe a new demand level, or maybe a new supply level, or maybe I need to remove this current supply if it's will be broken strongly to the upside. So then we can adjust the trading plan. This is just to show you how I go about it every single day. And I really hope this video was helpful. This is a very, very in-depth video. And I think making this pre-market plan so structurized every single day was really key to making me consistently profitable every single week, every single month. And I think it will definitely help you out too if you would follow this and be professional about it. Okay, it's all about being professional. And like I said in the beginning, you need to treat it as a business. It's not something to take very lightly. You cannot just draw a couple lines or a couple levels on the chart and just, I'm gonna, buy here or sell here or whatever. No, everything needs to be as professional as possible. You need to treat it very seriously, and then after a while, you will see consistent results. So anyways, guys, hope you liked this video. If you did, leave it a thumbs up. If you have any questions about this, let me know in the comments down below, and I will see you in the next and the latest module of this day trading course.